Michael, what do you think? Is this future like where we are seeing tokenizations, plus where we are also seeing the institutional DeFi getting it's expanding. So what do you feel like is the future of institutional DeFi like? And like I
Yeah.
know this question is a bit abstract, but I mean you can cover all the points.
No, I get it. The situation as it exists today in most jurisdictions is when it comes to tokenizing real assets, they get held in a vehicle, a special purpose vehicle, and then you issue capital out of that vehicle, which is typically debt, equity, or hybrid in between the two. So there's an application immediately today, and Jonathan already covered it, that blockchain is just a record of who owns what. So you match the token to something in the capital structure, such as equity. So the regulations and the legal constructs exist today to put an office building, some allocation of coffee beans, a reinsurance contract, a non-performing loan portfolio into an SPV, and then you recognize the equity held by tokens. So the tokenization is just the ownership of the equity. What I think will be interesting going forward is, will we get to a point where tokens, we've got our designation of utility tokens, for instance, which doesn't give you, it gives you a right to use the blockchain. It doesn't give you access to a third-party asset. So are we going to find a new designation in the capital structure, for instance, where a token entitles you to something? And what's the format going to be? Is it going to be a total return swap where the counterparties, where it's like a globally issued TRS documentation, and you have a right against the counterparty based on if you own the token or not? There's so many different permutations of how you could structure a token against a legal entity. And then do you do away with the legal entity? Is the trust, the deed ownership of real estate, does that get tokenized directly? These are the really interesting steps, which require huge leaps in regulation, because the concept of tokenizing a contract without a counterparty, just that there is a right to claim against it, don't really exist today. But you could imagine if we put on our fantasy hats, that you get there, that a smart contract could enter into a trust deed, for instance, to buy some real estate. And then the beneficiaries of the smart contract are the token holders. Those are the sorts of steps. They're not soon, they're not this year, they're not next year, they're not the year after, but they're on the evolutionary spectrum. And this is where you leave fiat behind, where you leave it for dead. When you start fractionally owning or security tokens, which aren't artificially wrapped in legal entities today. We do it today because that's what the regulations are. That's how you hold assets when it's not a natural person. You put it in an SPV. We will get to a point that these things fall away, I'm certain. And once you do, and the efficiency, so you haven't got to run a company, we have formulated rules of how you issue these, and you KYC the buyers, and they're traded on exchanges with KYC. So they meet securities-like rules, but you do away with the unnecessary corporation, if you like, that you would typically use as a wrap or a repack that we used to do in banking on a daily basis. That's where this really starts to rocket. And that's where you have sort of a DeFi version 2 as far as the instrument type. And that's what I'm quite excited about, because once then you have true tokenization of assets, as I said, it can be anything. It could be a loan portfolio. It can be coal on a ship. It can be electricity, medical, anything.
One thing I wanted to add on that, which I think is also what some people forget about this ecosystem, is when that starts to happen, it has network effects built in. Like if one company tokenizes their equity, they're more likely to also go on and tokenize other aspects of their business or pay using crypto payment rails. So that is where we are getting to a point, and it's up to anybody to say when it is, but at some point this will become exponential in terms of growth, and specifically around the business usage. We're not talking about consumer crypto.
Yeah, and non-crypto adoption of blockchain drives these things. You touched on carbon emissions tracking, industrial uses for blockchain, which aren't crypto related. There's value in capturing the information or the trading, or, you know, you could use it presumably for recording legal wills. You know, it's a mutable record of what you wanted. Those sorts of industrial uses, when they're accepted, that's what really kicks these things on. And I think we're getting there. There's really interesting uses for NFTs today. For instance, in the sort of individual ownership space, Motor's doing great things in the music royalties, for instance. It's a great example of a, not necessarily crypto, but transferring of rights and right recognition. That's when I think we really kick on, when, you know, you're willing to buy your music rights on an NFT, you know, instead of buying via Apple, a centralized provider, or going, you know, through the usual licensing rights. That's where I think this really kicks on. And of course, these things need to be held. They need to be owned. Your NFT of a JPEG, whether you think 180 million bucks is fair or not is irrelevant. The market paid for it. These are valuable assets at the end of the day. They're not utility tokens. And there'll be the new class of these things. And again, it comes back to, we need the infrastructure to hold these things. The banks will recognize someone paid 180 million bucks for a JPEG. That is a valuable asset, whether you agree with it or not. It needs to be held. So it always comes back to, where's the infrastructure to facilitate ownership of value at the end of the day. Utility tokens are valuable, stable coins are value, things that are deemed securities as of today are valuable. Building the infrastructure to hold this value, and then it evolves when you go beyond crypto, tradable assets, like we touched on, NFTs, carbon credits, all that sort of stuff. You need the infrastructure to hold them. You need the infrastructure to write them, and it needs to work for organizations, and not some guy with a Web3 wallet who you know, is tech savvy, because the vast majority of us are not. And Web3 is not straightforward by any means for these sorts of, especially new projects. So it always, for me, and I keep banging on about it, it always comes back to the simple infrastructure, which means the mainstream can work with crypto. Crypto needs to meet mainstream, not drag mainstream kicking and screaming into it.
Yep.
Absolutely. Again, coming to the same point, evolution to evolution. Amazing. It was a very insightful session.